The last time we spoke, targets for Friday were set and we experienced a high accuracy in hitting those targets. Something as simple as a weekly closing candle may be signaling a short-term upside probability. Let's pop open the hood to gain an edge over price action in the coming days. Welcome back to the channel on this Saturday. This is ARCa, and let's pop into GameStop. Let's kill 'em, team. What is up, you guys, and welcome back to the channel. Please do me a favor and hit that like button, subscribe to the channel, do everything necessary to get this thing to live long, thrive, and survive. So let's go ahead and take a look at this GME here at the 30-minute time frame. So this chart is actually showing us that we met the upside targets with some accuracy, right? So take a look at this. This is where we closed the 28.45 or 20. We closed on Friday, that Thursday, right around that 26.45 zone, right? So we were expecting a drop into this zone here of about 25.22 to 24.71 with a midpoint. And we did expect also a bounce to the upside. We spoke about the importance of this 25.96. And if we can't beat it, then there would likely be some downside targets to observe, right? So of course we met the three targets down here. In fact, we actually hovered around that center one. We resisted we resisted after coming down here off of this top one at 25.22. Eventually bounced from the 24.71 down here, right? Again in the middle one. And then we actually experienced the bottom side target, right? One of which we were talking about on that Thursday market prep, right? So take a look at this. This is the 23.70 that we've been kind of bouncing out of for a few times now, right? And that's kind of the reason why price action has been consolidating here for the better part of around 4 days. So I will remind you that still we have a little bit of a short-term inflection located right down here at about $28.22, right? So that 28.2 would introduce price action down to, I want to say 22.40 because of this here, but the reality of the thing is that it would really introduce this down here at around 21.68, right? So I want to make sure that you guys that I am being explicitly clear about that, right? Because there are potentials to the downside here, and we must be aware of them, right? So let's just go ahead and continue on the analysis here because I would like to display to you a few other scenarios, right? So, and yes, another chart here. I had that it's actually 21.82, I believe, right? So let's just go ahead and correct that like that. Bottom side of this wick here. And failing that, of course, would bring us down to some lower targets. And aside from the 21.68 that we have as a short-term pivot right about here, that would introduce a bounce to the 22.82 as a resistance before experiencing a drop to around the area of about $20.13. Now, it is important that we are aware if price action decides to go there. Okay, the $20.13 zone was responsible for the low that that GME hit before it ran all the way up to around $47.74. Okay, so it is a critical area. Now, it is also responsible for right here, right? You have this 2013 here. So let's move this little circle right here and then kind of highlight this area here. Now, that is also responsible for finding a bounce to that $80 zone that we experienced pre-market on May 14th. So very, very curious times there, right? So if anything, if price action did actually go down there, there could be an explosive move to the upside just based on that, on the fact that we've seen some massive upside price action there, right? So again, I'm not saying that it is going there, guys, but it's just it is important for us to evaluate price action as it is and not spread any hopium whatsoever. We want to spread the reality of things. But another thing that we want to observe here, guys, is the simple fact that we are declining volume, right? So we're declining volume while price action is going to the downside. That does bring in, it's giving you the idea that the bears are losing a little bit of control, right? So it is still, that is still the present idea. Now, if there is something that would per se save price action, it's, I would say it would be the right angled triangle, maybe, right? So if we're, we can go ahead and do this on a new chart. So let me give that, so let me just give that to you now, right? So we'll do this new chart right? Come on, create it. Here we go. So let's just go ahead and do GME, right? We're already there. Let's make sure that we are on log and come back down to that 1 hour chart, right? So let's just go ahead and make that drawing now. So there is a psychological property or a component to what we're presently doing here, right? So let's just go ahead and apply it as best as we can, so I can give you the targets in case this formation does realize. So I will say that if it does realize, guys, that's that's actually a pretty bullish thing, right? So let's just let me make sure that I have all the. This was the correct line here. Yeah, it would be best if we did it right about here. Let me see. There we. Let's see. Yeah, right about here. Right. So that's our regression, and this is the bottom. This is the bottom area here. Right. Wow. Just like this. So this is your right-angled triangle. Right. You have actually. You have your flat bottom, you have a hypotenuse on this. This is it does have mathematical properties, and it does have 3 targets to potentially observe. Usually the breakout point is around 65 to 75% to the apex of the triangle. That gives you a rough idea to where the triangle could potentially break out from, right? So this is now the 3 targets that we would observe, right? Center of the triangle, breakout point, and the rear end of the triangle, right? So this is it's just about it right there. So let's just say that we were to break out here on Monday. This would be this coming Monday. Let's just say that it did, right? So first target would take us to around 29.57. The second target would take us to about 32.31. And the last target would actually take us to, you know what, we can actually adjust this here because there's a little bit of a deviation there. The last target would take us to around 35.94. Okay, so now please bear in mind that this triangle can be played both ways, right? So we would need to be careful about that too. So let's just say that price action were to break down here, and you would also have, 3 implied targets to the downside as well. Okay, and they are targets that we've already spoken of before. Okay. So let's just go ahead and observe what the probabilities are here. In order for us to do that, we can observe something in the weekly chart. The weekly chart is actually telling us that we closed red. This is your weekly candle. It takes a week to complete this, the entirety of this candle here. So when you get a closure of a candle, like for example, this one, right? It opens on top, red candles open on top, right? Green candles open at the bottom. So this candle went up to about $48, and then it came down all the way to around $25.19, and it closed right here at $28.25. Now, on the next week, you can see that this candle opened here, but it retraced, right? It went up first. So that typically shows you, that's the typical behavior here, that it retraces anywhere between 44% to 50% of the prior bar, this being the prior bar, to this candle. So this is your 50% mark, and take a look at where price action went. This is your 384, 50%, and it came down to 33.70. It came up to 33.76, and then it came back down, right? So that is presently what I am observing. The fact that we have a weekly close on GME will tell us that we should be getting about a 44 to 50% retrace of the prior bar. If that's the case, then the 50% mark is located at 26.20. 26.20 gives us a fair bit of information because this is very close to the opening valuation of this candle here. So the opening valuation of this candle is actually 26.34. So we can adjust that because we would like to favor not the 50% retrace, but what's near the 50% retrace. In this case, 26.34. Right? It's probably going to leave it at 35, whatever. It's all good. So now, just like everything else, there is a range, and a range that we must respect, because this weekly candle here absolutely has confluence with a lot of support areas in the past. So we have to take into consideration the low of this candle here as well. So let's just go ahead and mark it off. 25.23 to 26, we said 34, but 35 is okay. And this gives us the overall range for a potential pullback or retracement to the upside. Now, what's going to happen here, I don't know. But let's make sure that we have the targets here, and let's make sure that we have the receipts, just like always, right, guys? We're going to make sure to always catalog the receipts here so that we're all running in, on the same page here, right? So let's just make it a little bit bigger here, right? So that everybody could see. Next one we're going to do is write down here, of course, right? Come on, man. Here we go. There we go. Okay, so now we have the targets that we think that we can go to. So 26.35 to 25.25. Let's go back now to the triangle that we were observing. So that's 25.25, right? 25.25 to 26.35. So if we look at the resistance levels that we're looking at, so let's just say, for example, we said that we would break out from around this point here. So if it is going to break out, that means that we have to test an area. So if this is the zone that we're saying we're going to break out from, what's the resistance there? So let's see. Look at the resistance. It's telling us that it's 26.49. What do you know? Right? So that's the resistance of your regression. Now we're understanding a buy strategy, right? We're understanding the long strategy using two different methods. And it's a method using statistics, right? Whereas a method using a larger time frame retracement and also using an immediate short-term time frame psychological target based on a psychological formation that has mathematical properties, being the resistance of the hypotenuse, right? So all things that I teach. But anyway, let's go ahead and now observe. So we said 26.49 on this end. The weekly time frame is telling us what? 26.35, pretty damn close, right? Pretty good. Now, what's cool is that the high end of this candle here is telling us that it's about 26.66, so that it gets us even closer, right? It just gets us even closer. 26.66, yeah, we're right around the corner. So the whole thing is that if we're going to be breaking, that we're going to need to get over the 50% retrace of that prior bar. The problem is that you can see that this one on a downtrend retraced the 50% and then it fell. So what would happen here? Is this going to retrace the 50% and then it's going to fall? Well, if it does fall, where would it go? Right? So that's the next question. So if it does fall, first target is telling you is 2140. At the beginning of this video, we spoke of 2160. Now, the center of the triangle is telling you 1983. 10 minutes ago or 5 minutes ago, we spoke of $20 and what was it? 2013, I think it was 2013. Yeah, 2013. So now you're noticing how everything is rhyming, right? So that's 1983, 2013, right? So this is the first one here, 2168 as the target's 2141. Or the psychological formations 2141. Now, we also have the inflection point that was responsible for a bounce all the way up to $80 and responsible for a bounce to $47. That's telling you 1983 on the formation, which is 2013 for the historical price, and the absolute bottom price of $17.65, which marks off a very, very confluent bottom to so many areas that were also responsible for price. Now, when you consolidate all of this information into one shot, then it exposes a very interesting range that GME has traded historically. So you can see here how much activity there has been in price action up and down this range here. So that's kind of what we're implying again. Look at this. So now we're coming back in here, right? And there could be some chop in there. If that is the case. Now, here's the good news though. Because remember that I always will give you my bias. I will always give you the upside, the downside, the probabilities, and I will also give you my personal bias, just like I did from Thursday to Friday, right? So, if this formation, the problem here is that if this formation is built during an upside, that usually means downside. There are times that we can use this formation for the upside too. So there is a bull play within this. So if I were to put a bull play, then I'm seeing immediate short-term upside. The condition is going to be that enough people believe that this has the psychological properties for a bull play, and it'll break price action to reach at least 29.71, maybe 31.96. Now, what's the ATR, right? What's the data telling us? So let's go ahead and pull up data cells here and see what's up. So your daily average true range here is $6. We're at around $24, and I am giving you a target of about 26 to 29.57. That's your $6 average true range right there. Now, that means that we have a shot. So that now gives me a 60% probability, maybe 65% probability that price action does continue to the upside and eventually resists at least to the 29.57, and then it'll come back. The retracement there is going to be the dangerous part, because when we do go up that is implying that we're going to break above the 50% right here and go up to that 29 whatever, right? So we're implying here almost an entire weekly range, a 100% retrace. So that becomes something a little more interesting. And I think I would really it would be interesting here. Let's follow me here. Follow me on this, okay? I hope you're still listening here. Follow me on this. If we do retrace back from this area aggressively and we open the candle down here at around $23, what that's going to do is this. Check this out. We would open up a candle like this, right? So it's going to pump all the way up to that 29 or $30 zone, right? And then it fails completely. And the price action comes all the way back down and probably closes around 22.78. If it closes around that 22.80 mark that we've been talking about, or 22.81, 22.84, whatever that is, because of the historical value of the candle performing that huge upside, that presents a very bullish situation. Now, what is that? That now, my friends, would present the potential of an inverted hammer after a downtrend. Now, if that's the case, I do have to warn you here, because this is a massively bullish reversal formation that can introduce a potential reversal, a V-shaped reversal, okay? I gave you the whole story now. All right, so I do think that there is a short-term upside. I do think that we could experience a retracement from that short-term upside back to the areas of around 22.80 as well. Okay, so be careful on the markets. I do not think that this is ready for a freaking MOAS unless it has an incredible freaking catalyst behind it. Okay, now remember, I guess, guys, this may actually be for the master's course this term. I guess this may be my last call. Oh, and maybe even tomorrow, right? Because we just started with the students today on Saturday, and we have we're gonna repeat the same session on Monday. So make sure to get in touch with me if you would like to be a part of this course. ArcMastersCourse at gmail.com. And I guess I could still squeeze in maybe 2 or 3 seats, maybe 4 guys. This is the biggest class I've ever had. We had present today around 45 people. Okay, so one classroom of 45 is not really what I would prefer, but it's okay. We're at the might as well the 50th, right? So make sure to get in touch with me here, and we'll get you enrolled before the next one is announced, right? But I love you guys, and I do appreciate you for coming by. If you want to track the markets here with us, if you want to trade live with the ARCa Bulls trading team, make sure to hit those links in the bottom left and bottom right, and it's also in the description below for you to join the ARCa Bulls trading team, right? When we reach 200 members, we're at about 186 now. I'm probably going to be closing off the entire entry system for the trading team overall for a few months. So make sure to get with me using either these barcodes down here in the bottom left and right, or getting in touch with me at the ArcMastersCourse for your education. All right, team? Really appreciate you, and we'll go ahead and talk very soon. Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever, ever. I need you to do your own due diligence, and everything will be cool. But with that said, team, I wish you well a very, very good rest of your night and/or day, and I will catch you at the bell on Monday. Adios, team. Oh, yeah.